On June 19th, retail investors watched in panic as Infosys shares dropped nearly 8% in a single day. This sharp decline forces an immediate choice. You have to decide if this is the beginning of a prolonged collapse for the Indian IT sector or a severely mispriced buying opportunity. To find the actual answer, we have to mute the sensationalized financial headlines and look entirely at the raw, unfiltered numbers. Our goal here is to separate statistical signal from emotional noise. We will do that by cross-referencing Infosys's most recent Q4 2026 earnings report with the overnight trading data from American stock exchanges. Emotions are driving the current sell-off, but mathematical reality will dictate what this stock is actually worth. The trigger for this crash had nothing to do with Infosys. A day earlier, the global IT firm Accenture saw its stock plummet 18% after they cut their revenue forecast, a drop caused almost entirely by a pullback in spending from the US federal government. Because these tech stocks are grouped together in global portfolios, that single warning triggered automated algorithmic selling across Indian IT stocks trading overnight in the US. Applying that penalty to Infosys requires ignoring their actual client mix. Infosys has very low exposure to U.S. federal contracts, and they recently issued a highly resilient revenue growth guidance of 1.5 to 3.5% for the 2027 fiscal year. The market is blindly punishing one company for the highly specific vulnerabilities of a competitor. We are tracking Infosys's price-to-earnings ratio plummeting right through its stable 10-year historical average. But while valuation drops, cash generation moves in the exact opposite direction. In Q4 2026, net profit surged 27.8% to 8,501 crore rupees. They achieved this through strict operational efficiency, maintaining healthy operating margins of 20.9% and generating $3.5 billion in free cash flow for the year. They are immediately passing that cash back to shareholders, announcing a final dividend of 25 rupees, bringing the full year total to 48 rupees. The numbers paint a clear picture of an accelerating earnings machine that has become entirely detached from its panicked share price. Beyond the Accenture contagion, there is a persistent fear that artificial intelligence will automate away the need for traditional IT service providers altogether. This visualization shows how Infosys is countering that risk. They built an AI services platform called Topaz Fabric, and we are seeing it lighting up across the network. It is currently utilized by 90% of their top 200 clients. They are actively locking in strategic partnerships, like a recent deal with Anthropic to embed Claude AI models securely into highly regulated sectors like telecommunications and finance. Look at this stacked bar chart of their forward-looking pipeline. They secured a record $15 billion in large deals for fiscal year 2026. And crucially, 55% of that is net new business, not just contract renewals. While retail investors sell off their shares in fear of AI disruption, large enterprises are actively signing massive multi-year AI implementation contracts with Infosys. If your strategy is focused on short-term trading, you need to prepare for continued volatility, while the broader market slowly digests the reality of U.S. enterprise tech spending. If you are a long-term investor, the data suggests this is a rare window to acquire a highly profitable, dividend-paying tech giant at a steep discount. Let me know your strategy in the comments. Are you buying this dip or staying away for now? And please, like and subscribe if you want more unfiltered market analysis. Gaining a real edge in the stock market requires you to completely filter out the noise and put your trust entirely in the raw data. As a final note, I am not a SEBI-registered investment advisor. This entire analysis is based on public financial data and code and is intended strictly for educational purposes, not as personalized financial advice. Please conduct your own independent research or consult a certified financial professional before executing any trades in your portfolio.